Good morning, everyone. It is March the 30th, 2016. One more day to go to end of month, end of quarter, and then Friday we have our non-farm payroll numbers. Today we'll kick off the news day with the ADP number at 203 is the forecast. I've seen it as low as 195. So Econoday's carrying 203. They got more clout than most other services, and that's the number we'll go with. Crude inventories at plus 3.1. That seems to be the norm, plus 3 million barrels right now on the build side. The focus will be the ADP number, the E-minis reaction to such, and the direction of the E-mini. And I think the E-mini probably wins when it's all said and done, and then the 7-year auction. Now, during auction time, they can't move the paper they need by taking it straight up unless there's a piece of news associated with it, some trigger to support that particular rally. So we usually have up and down. The 7-year can be a little lower into the auction, but it usually recovers at auction time, and then the issue becomes, will it hold that into the close or not? The market is auctioning higher. If we go back and we look at the prices on the 10-year, roughly 12, so a 29.18 is the average of the last two auctions, and so anything above 29.18 probably works. So that gives us a lot of room. That 29.18 number is right down here where the high volume number is. So today's limit buy will be at 29.18.5, 29.19. Strictly based on structure, if we break that, then the next limit buy will be at 29.10. So we do have some news to get through this morning before the day session opens. So right now we're at 31.5, 3 to 7, sell 1. 11 to 15, sell 2. On the buy side, 25.29, buy 1. And then 17 to 21, buy 2. Okay, the knob spread has come in and probably will continue to come in some more this morning. It's under pressure. We've got the London high at 18. Then we have the W high at 9, and we're currently trading 7. So 11s to 15, sell 1. And then 20 to 24, sell 2. On the buy side, the I period low is 25. So I'm going to put a question mark at 01. That's pretty close. We're 6. 25 is pretty good support. So 29s to 01s, buy 1. And then 17 to 21, buy 2. And we'll see what happens. Okay, on gold, we're in the June contract this morning. It'll trade front. The opening bell actually is traded front in London, so the volume's all in the June contract. Numbers are pretty close. So right here we've got a London high of 44. We're currently at 38. And you can see then we have a high of 42, then 41, and then 40. So 40 to 42. sell 1. Pretty aggressive inside the value area high. 45, 47, sell 2. On the buy side, we had the breakout from basically 29. We do have volume at 35, so it's where we are right now. 36, 34, buy 1. 29 to 31, buy 2. Dollars off pretty good overnight. A lot of currencies rallied around the globe. It's funny how dollars up one day, off one day, up one day, maybe up for 2 days. Generally higher, but definitely in play. And Yellen's dovish statements yesterday hurt the dollar, and we're seeing that reflected around the world. So we're at 1360. 1375, sell 1. 114 even, sell 2. The buy side, the breakout came from 1330. So we'll have a 35. Let's see on the buy side, W. So 30 to 40, buy 1. And then the buck to 15, buy 2. And again, this this pattern, you know, the European Union does not want this currency higher, and will fight to, well, they won't support the rally, let's put it that way. And so when we get the commercial or the trading shorts covered, squeezed, then the market's vulnerable to a quick selling. And the issue is timing that, and that usually happens in London. It doesn't usually happen in our time. London is the center of the world's currency trading. Okay, crude continued its rally overnight. We've got this April OPEC meeting at Doha, and nobody expects anything out of it, but it doesn't mean it can't happen. And again, most people don't understand this. I'm starting to see some in the press talking about fighting for market share. But when OPEC fights for market share, and it really, really gets ugly. And that's what's happened. And that's when the bottom falls out of the market. Now, you can go back and say, you know, Saudi Arabia cut 500,000 barrels a day, 1 million barrels a day. What would that do to their bottom line if crude oil was, you know, 70, 80, 100 bucks a barrel, as opposed to 40 bucks a barrel right now? And it's pretty easy to see that fighting for market share per se can take away a lot of revenue, maybe more than you potentially get by preserving your market share. And like everybody else, oil purchasers, they will buy what they need to buy from Saudi Arabia and the important producers to maintain that channel, but they don't have to buy everything from them, and they will go to the lowest cost producers and pick up some of their needs. So crude oil, basically we're selling 39, 39.50, and on the buy side 37.75, maybe 38 and a quarter, and expect a range trade today. I didn't see the API numbers out last night, so they're probably delayed today. I'm surprised we're getting our crude numbers today, because usually any holiday will delay you. Okay, let's take a look at potential resistance. We got these two highs right here, that 70, 72 area. If we get through 60, got this high right here at 79, then we're back up to 521.08. So 70 is probably 70.75 is probably best resistance on this chart. On the support side, we had that low volume number at 30. We said as long as we stay above 30, structurally the next stop is 20.97. And if we're that close to recent highs, then why not, at least stops above 2100. So here's the number staying above 32.50. We can do that. This market can continue its rally to trade higher. And I think that's where we are right now. Now, why is the market higher? It's not off of revenues, increased revenues. It's not up off of increased bottom line profit margins. It's up because of central bank intervention. And so bad news is good news for the stock market. It means the Fed can't raise interest rates. Interest rates are headed lower. What do low interest rates mean? It means that corporate executive officers can buy back the stock to support stock prices. Why do they do that? It's how they're compensated. Remember, under Bill Clinton, I believe it was, that any executive compensation over $1 million a year was going to be taxed. So these guys can make $1 million a year in salary, and the rest comes from stock options. And that's kind of one of those an example of the law of unintended consequences. Funny how that works. Low volume number at 60, high volume number at 63. Next low volume number is up at 66, so the sell is 60, 65. We do have an up bias today, but if we fail to take out and hold this high right here, then we can get short in anticipation of a retest maybe as low as 2048, 2050. Sell 2, best resistance we get to 65, 70 to 75. A little break in with bar chart highs, and the rest of it's in the 72 area. Structurally, a limit sell at 69 would work. To the downside, structurally, 252. So we'll make 250, 255 by 1, and then 40, 45 by 2. And we have news in 12 minutes. When the ADP number comes, they're looking for 203,000. I've seen it as low as 195. Okay, it's going to take a while to get everything up and posted. I'm going to get busy on that. I will be back as soon as possible. We'll see what the ADP number does in 12 minutes and proceed from there.